Hi everyone, I'm Sheila, Managing Director here at Bisworth. Today's video blog is about comparing the results from a business valuation calculator to that of a certified business valuation completed by a certified business appraiser. So we thought it'd be fun if we took a valuation of a company we recently completed here at Bisworth and compare the results from that certified business valuation to that of the output from a business valuation calculator that we found on the internet. There are lots of business valuation calculators out on the internet, and we just picked one. And over the coming months, we'll do this a few times that we complete valuations here at Bisworth. We'll compare them to different calculators that we find out on the internet. So the company that we looked at was one that we finished a few months ago. It is an automotive repair and maintenance company. The company has an 18-year operating history. They're at a single location. Their average revenues over the past 4 years have been $2.9 million, with an average net income over the same period of time of about $330,000. And the valuation purpose for this particular valuation was a purchase with an SBA-backed loan. So what we'd like to do is show you the certified valuation that we conducted here at Bisworth. And the certified valuation is fairly robust. You can see from the table of contents, there's a lot that's covered. Everything from an executive summary that attempts to summarize the entire valuation within about 5 pages to the introduction that really states the purpose of the valuation and the background of the engagement. And then very important is to discuss the nature and history of the company, the overview of the economy and industry in which the company finds itself operating in, and the financial condition and the earnings potential of that company. And this is where there's a robust financial analysis, not only of the company to see its trends, but also to benchmark against the industry competitors. And then we conducted the valuation of the company, and certified business appraisers must adhere to looking at 3 different approaches to valuing a business based on the assets, the income, and the income usually is the cash flows, net cash flow analysis, and then third is the market approach. And then there's quite a few appendices thereafter. So on this particular company, with the information that we described a few minutes ago, you'll see that this particular company had a conclusion of value of $2 million, and this was for 100% interest in this business. And so for this particular company, what we did was we went out to the internet and we found, there's many calculators, but we chose one. And the one that we chose is actually fairly more robust than a lot of the others that we found. It's a multi-step calculator. The first step was to determine the cash flows of the business. So we put in all the information from sales, cost of goods sold for the business, to operating expenditures, officer salaries. These are potential add backs. And I won't bore you on this video with what are these add backs, but there is potential to have add backs, which will usually help your valuation because you're adding back an expense that was taken from up above in the income statement. Add back depreciation, that's a non-cash item, interest, other expenses. So once you plug all this into the calculator, you scroll down, and the next step is to determine the multiple of earnings use. And here they have a few different inputs that they're asking for. They have the industry in which the company operates. And for this one, it's auto repair, parts and services, and the earnings trend. Here we chose just a simple steady revenue sustainable, but in all actuality, I believe this particular valuation had a mid to long-term growth rate of 3%. Risk factors, we didn't choose any based on the attributes of this company. This says no employees, non-interest. This basically means it's a sole proprietor business, which adds a bit of risk. The industry is not in decline. This particular company had good books and had been in business for longer than 1 to 3 years. If any of these items were checked, our assumption is in the background they were adding risk or increasing the discount rate, which would cause the valuation of the company to decrease. So increasing discount rate, decrease the valuation. Factors that was going to help the valuation, we chose SBA financeable. This company was getting a certified valuation for an SBA backed loan. And then this business had been in business for longer than 10 years. If you scroll down further, this calculator is asking for the purpose of the valuation. And we thought this was a really nice touch until you see that it's for information only. And we'll discuss why it's probably for information only. But so depending on what you check, it's not going to matter. It's not going to have any impact on the valuation. We chose business purchase. That's what this is. You click calculate business value. And now you can see the valuation of the business, which is a little less than $870,000. It goes through and gives you just a summary of what you'd input. And they also provided some valuation ranges, which I thought was interesting. The trailing 12 months was $869,000, and then they gave an upside, the higher end of $1 million. The reason why this is interesting is because this calculator produced $869,000 as a valuation, and evaluation from a certified business professional came back at $2 million. And you can see how far apart the two are. It's less than 50 cents on the dollar. And if you were a business owner looking to sell your business, you would automatically be thinking about a much lower price for your business. Maybe you'd be shocked. If I had this business for 18 years, this automotive company, and I thought I could only sell it for $1 million, I'd probably be a bit surprised. So I think one of the reasons why there are so many calculators out there on the internet is because there are firms out there that are either brokerages where they're wanting to sell your business for you or help you buy a business. There's other valuation firms that are trying to get you in the door and they're trying to collect information. So I'm not really sure how useful business calculators truly are. I do think it's a gateway for collecting valuable information from business owners or prospective business owners. So be really wary if you're using a business calculator for anything more than just having some giggles about what your company may be worth. In my history, my 20-year history of valuing firms and projects, I have very, very rarely, if ever, have seen a valuation come close from a business calculator, come close to where the proper certified business valuation came out. And so that's a bit scary. At the end of the day, I think business calculators are great conversation starters for brokerages trying to get a business owner to give them information. Also, a lot of calculators require you to put in your contact information before they'll give you the estimated value. And so it's a bit of a hook to collect your information. So be really wary of giving information through a calculator, and be especially wary of what you do with the information that you receive back. If you have any questions about business valuations, BizWorth is always happy to have conversations with anyone looking to buy or sell a business. Maybe partners are in disputes wanting to sell back their shares. You can schedule a free consultation on our website. We conduct free consultations. We're happy to have a lengthy conversation. So if you have any questions, don't hesitate to reach out to a professional. I hope this video blog was helpful, and I hope you tune back for more videos in the future. Thanks so much.